The Zacks Rank, value, momentum, growth, and income all factor into Zacks Rank buys.
We've got an automotive systems company and a construction company on the value stock radar this time around, and our value strategist Tracey Ryniec is going to fill us in on why. These are a couple of interesting companies.
Yeah.
On one of them, at least, we're going to need to clear up a little confusion. That would be Lear Corporation. It's the automotive systems company, not the Lear jet company.
Right. I always get it confused myself because I think Lear and I think the jet right away.
Yeah.
But these guys they've been around forever. They do automotive seating, and then they do electronic distribution systems within autos.
Okay.
They are in the news right now because one of their investors, an activist investor, he owns 4.6% of the company, sent him a letter saying he thinks, maybe it would be best to split up these two divisions. So you would just have the seating on one side, and then you would have the other electrical stuff on the other side.
Activist investor, is that like code for troublemaker?
Well, it can be, but sometimes they do have a point, and they do unlock value. So people are, thinking about maybe possibly splitting up this company. The company issued a letter saying that, they listen to all their investors and their shareholders, and they keep everything in mind. So that's just kind of out there floating around. But both areas are doing fairly well because the auto industry is so hot. We just got the January auto sales numbers.
Yeah.
It was a record for several of the American automakers. Toyota had good numbers. If you're making the seats that go in those cars that are really hot, you're doing well too.
Yep.
It's Zacks number 2. They already did report earnings, so we've already heard from Lear, and it was good. They beat again. They are cheap, still trading around 11 times when the overall market is, 16, 17 times. So things look good from that perspective. I put up the earnings here because you can see them trending higher here after their earnings announcement. They gave good guidance for 2015. It all depends on how many autos are sold, but North America is supposed to see another about 3% growth on autos. And then Europe is basically supposed to be flat, but given everything going on over there, that's not a bad development.
Yeah.
And then China, they see China-Asia about 8% growth. So, earnings are going to go up here double digits because everybody still wants the cars. Also, I didn't realize this, but the average age of the automobile in the U.S. now is 11 years.
Really?
So that's why when everybody thinks the American consumer is not going to keep buying, I think they are, because those cars are aging and they want something new. So Lear's a good play on the continuing recovery of the auto industry.
Okay, Lear, not the jet people.
Not the jets.
Okay. Now, this other company here, Tutor Perini, is actually a combination civil engineering and construction company?
Yes. Tutor is also, a big play on the recovery because they have a construction on big construction types of projects.
Okay.
So on the civil side, they'll do subways and tunnels and bridges and things like that. And right now they're involved in the big subway build in San Francisco through Chinatown, those kinds of projects. And then on the private side, they'll do big hospitals, convention centers, sports stadiums, and things like that. So both of those areas right now are recovering off the recession, and they're getting these contracts in. So also Zacks number rank 2, they haven't reported yet. They're probably going to report towards the end of the month. But super cheap. The shares have been selling off the last couple months for unknown reasons. There hasn't been anything in the news. It's trading under 8 times. So this could be a buying opportunity for this kind of company. We kind of know what the earnings are going to look like based on some of what they tell us about the contracts they're getting. So you can see 30% earnings growth expected for this year and another 22% for next year. These are great numbers. Combined with the cheapness of the stock, you get a PEG ratio of under 1, which is kind of rare. You get both value and growth with this company. I put up the chart here. You can see it's the earnings surprise chart. They have beat the last 3 quarters, but again, the shares just kind of weak here on no real news. So as a value investor, I like to see that. This could be a buying opportunity here heading into their next earnings call here in the next couple of weeks. But both these companies really participating in the recovery of the U.S. economy.
Okay, that's good news, I guess.
Yeah.
All right, do you own either of these two?
I do not.
All right, check us out on Zacks.com if you want more stock picks and stock picking strategy suggestions. You can link to them all right off the homepage, and you can follow us on Twitter.com, twitter.com/Zacks Research. Meantime, with Tracey, I'm Terry Ruffalo.